Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. There are certainly lots of ways to invest in real estate, and today we're going to explore a couple of hot market niches with a super syndicator that helps folks create awesome returns. Today on the Real Estate Guys radio program. The Real Estate Guys are throwing a party and you're invited. Join us live at the New Orleans Investment Conference, October 19th through 22nd. Now in its 47th year, it's the nation's longest running investment conference and features some of the biggest names in economics and investing, including Jim Rickards, Ron Paul, Danielle DiMartino Booth, Rick Rule, Doug Casey, James Grant, Peter Schiff, and George Gammon. And of course, the Real Estate Guys are speaking again this year. Plus, we're hosting a private hospitality suite one of the evenings with some very special guests. So make plans to join the Real Estate Guys at the New Orleans Investment Conference. With everything going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me, as usual, it's our co-host financial strategist, Russell Gray.
Hey, Robert.
You know, we love real estate. We love it a lot. And the cool thing about real estate is it's not just one thing. There's so many different places, so many different styles, so many different risk parameters. And we love to talk about different types of real estate investments. We have a great chance to do that today as we talk to one of our great friends and a gentleman that came into real estate a different way. He was driven by figuring out how to save tax, and it's crazy where that road has taken him.
Absolutely. You know, one of the things that I love best about what we do is not that we get to meet, best-selling authors and people who are big-brained people that are well-known, folks you see on TV. We love all those people, and they're great, and we learn a lot from them. But there's a whole subculture of people out there, just amazing investors and business people that are having great success, and they just find new ways to solve problems and creative ways to use real estate to address those problems. And every once in a while, you meet somebody that's just absolutely extraordinary, and you never know when it's going to happen. We do our summits, we do Secrets of Successful Syndication, probably our two main events. We go to conferences like the New Orleans Investment Conference and meet people in other tribes or ponds, if you will. And you just never know when you're going to meet that next amazing person. And so today we get a chance to visit with someone that has come in already a successful business person, but really kind of anti-real estate if you think about it, and kind of had the light bulb go off trying to solve a tax problem. And, we've had him on the show before, which has been fantastic. But then to watch these people who come in, and our motto forever has been education for effective action. And they take a simple class like the Secrets of Successful Syndication. They plug into the ecosystem and meet some of the providers that we call them, that some of the folks that we run around with and make products and services available to our audience so they can act out on their education. And then they go do something that is just so beyond your imagination, and they just go completely to the next level. And the principles that they learn, they put into practice. And now, people that had been students actually become mentors to us. And it's just been a ton of fun. So I'm excited about today's show because we do have a lot of things to talk about, and especially because everything going on in the world right now. There's a lot of things in flux, not just the economy, the financial system, the dollars, but now the tax code, the big tax revolution a few years ago, and now we're revisiting that whole thing. So there's just a bunch of things going on. Smart investors have to figure out how to navigate all that.
Now, our guest is definitely an accomplished investor and raises a lot of money, but I think you're going to be able to learn something whether you're brand new and are just thinking about getting started in investing. You can hearken back to his story of starting out, or if you're seasoned and sophisticated, there's some things you'll learn. There's kind of two camps when it comes to real estate investors that we meet. There's folks who decide to get rich in a niche. They do one thing, they get really good at it, they do it extraordinarily well, they build a team around it, and that is their thing. They're the condo king. That's what they do, is condos. Nothing wrong with that. That can make a lot of sense. But our guest today kind of looks at things a little differently, to be more diversified, and the fact that he's interested in a lot of different investments. Means he's a student first. He goes figure stuff out. And then if it makes sense, he finds out whether or not there's a way he can create value and puts together teams in really diverse industries. We'll talk about a couple of those today. And more importantly, you'll hear his story when we come back. Our friend Dave Zook, the real asset investor, on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Are you achieving everything you want in life? What if there was a time-tested way for you to get all you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2022 Goals Retreat, January 7th to 9th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events, or call 888-489-7723, extension 18 to reserve your spot. Get your life back on track, physically, spiritually, and financially. Attend the live in-person 2022 Goals Retreat on the second weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today.
Hey, I'm Jim Grant. I'm the editor and indeed the founder of Grant's Interest Rate Observer, and you, ladies and gentlemen, you lucky people, are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com. We're talking today about how do you figure out your path? What do you want to be when you grow up as a real estate investor? And our guest has been down that process. We first met in 2012 at the Investors Summit. Had no idea who he was. He barely knew who we were. And since then, we've formed a great alliance, a great friendship, and we continue to learn as much as we teach. To this gentleman, let's welcome back to the Real Estate Guys radio program, Mr. David Zook. Hey, Dave.
Hey, guys. Good seeing you again.
It is always a pleasure. We're looking forward to seeing you here shortly at one of our live events. But Dave, take us back. It's been a while since we've had you on the show. You're a successful business guy who didn't necessarily get the real estate bug, and yet you found yourself in real estate. What was that all about?
Yeah, when somebody asks me, well, how did you get started? I got to go back and think, my answer usually is I got chased into the space. As I was growing up, watching my dad, a very successful businessman, invest some of his business profits into real estate. And he bought some farms and some land and some single family homes. And I watched him self-manage those single family homes. I just decided early on, and this was in my teenage years, that I was never going to do that. I wasn't going to be a real estate investor. And so I went down a different path. I started investing in businesses, and I founded a couple. I partnered in some, and I got to a position where some of those businesses started doing really well. And I found myself about a decade ago paying $500,000 in tax. And I still remember where I was standing when I got the call from my CPA saying, hey, we did everything we could. We took the deductions we could. You've made your quarterly payments and you still owe a couple $100,000 in tax in 2 days. Get ready to cut the check. And so I was working a ton. I was up well before daylight every day, and I was usually working well into the night. But it was fun. I was having so much fun running my businesses. But when I got to the point where I had to give about half my money back to the government, it just wasn't so much fun anymore. And I had to go learn how to protect myself. And I grew up thinking, being taught that you make a lot of money, you got to pay a lot of tax. And by getting around the right people, by doing a deep dive, by getting around you folks and, Robert Kiyosaki and Tom Wheelwright. And when I heard Robert Kiyosaki make the statement, you can make millions of dollars a year and pay little to no tax legally, I had to go find out what that was about. And I ended up chasing him down at your Real Estate Guys Summit at Sea. And I wanted to get around him and a CPA and figure out how to do exactly that. And then Tom Wheelwright said another thing that changed my life, and that was, if you want to change your tax, you got to change your facts. And it was the first time in my life I realized that I could take control of my own destiny in that area. And so that's why I started investing in real estate. I soon realized that multifamily apartments, cost segregation, those were words I didn't even know how to pronounce back then. And so I soon realized that was a path to not only building wealth and income streams, but even more importantly for me at that time, it was a way to protect myself from my own tax liability.
I love that story because so many people approach real estate because they're into the idea of buying houses, or maybe they like to figure out design and build, or they want to rehab rentals, and that's the door they come in. But your door was anti-real estate, but looking to lower your tax bill. And sure enough, that's something real estate does. Now you've become really good at it. So you've invested in all kinds of real estate in all kinds of places. And then for many people, the next natural evolution is to syndicate, to raise money, to do more deals than you could do yourself. And we'll talk about how that's worked out for you. But the first few deals you did like that, pretty much friends and family. Talk about the jump between just investing yourself and bringing others along.
Yeah, well, the first thing I did when I realized that I was going to go down that path, and I knew myself good enough. I mean, I like doing deals. I've been an investor since I was in my teens. I like people. And I just thought, man, that's got to be the most fun way to make a living or way to do business ever. Because I was running businesses at that point, and it was sort of just like me and my team, and nobody really at my level that I was really communicating a lot with. And so when I realized that I could do this, and I could do it with other business leaders, and I could bring them into the deal with me. In the beginning, when I did this for myself for a very specific reason. We just talked about the tax. But then when I realized that I had the team set up, and we did a couple deals, I bought a couple hundred units, apartment units of my own, ran out of my own money, eventually ran my family out of their own money, and sort of had to go out into my business network. And it got to the point even then that I sort of ran out of my own ecosystem with family and friends and business networks. And, as I was getting into the space, one of the very first things that I did was join the Syndication Mentoring Club, because I knew I had to get around people that were doing it, that could help me take a big shortcut, and that could help me keep me from making some of the mistakes that I certainly would have made if I'd went out and tried to do it on my own. But no, it was an interesting journey. There was those times when I wondered, what am I doing in this space? I've got a good thing going on in my businesses. I really don't need to do this for the money, but I knew that I wanted to do this, that it was my life's work. So I didn't give up. With you guys' help, with other people in the Syndication Mentoring Club, I was able to kind of break through them barriers and decide. I think it was sort of a psychological thing too, where I decided at some point, it was like, whatever it costs, whatever it takes, I'm doing this. And if it kills me, I'm going to keep doing it. And so I think at that moment, some doors opened up, and I was able to keep moving forward, and I quickly got some momentum.
Well, and fast forward to today, instead of just doing your own deals, you go out and you look at opportunities and marketplaces and real estate and non-real estate, in fact, and offer an opportunity for passive investors to come alongside you. How much in total have you raised in terms of syndication capital, Dave, if you're willing to share that?
It's right around $350 million.
And how long of a period?
I think it's right around 7 years.
All right. So your mileage may vary. Those are extraordinary results. And what we want to talk about today is some of the things that you do. So we couldn't possibly cover all of the niches that you're in. You've done a really great job of having diversity, not just for your own portfolio, but for offering to your passive investors the chance to try out different asset classes, different risk profiles, different durations of investments. But specifically, one of the things I wanted to ask you about, because I know this has been near and dear to your heart, plus it's a great, great niche, one we've been looking at for a long time, and that is self-storage. So talk about the real estate niche of self-storage and how you found yourself there.
I was doing a lot of multifamily apartments, and I made the shift in around 2017 and started going down the self-storage path. And one of the reasons I did is I recognized that it seemed like in times of disruption, in times of distress, self-storage had performed very well. You look at 2008, and you look at not knowing this then, but you look at 2020 and 21 and how it's performed even today. Self-storage is an asset class that performs very well under times of distress or disruption. And so that intrigued me. And as we were coming out, you had 2008, 9, and 10, and then you had the big bull market of real estate asset classes, a lot of them, and specifically apartment buildings, which is the asset class that I was most heavily in at that time. I just thought, that now may be a good time to diversify a little bit and maybe get in some asset classes that do very well in times of distress, disruption. So as I did a deal or two with my team, we ended up now today we own 20 some institutional grade self-storage facilities together. We've really enjoyed working together. They're top shelf in terms of management, one of the top 25 in size, 25 self-storage operators in the country. And, we've just had a lot of fun together, enjoyed working together. And the asset class itself is one I believe in. And if you do it with the right team, it can be a great asset class to be in.
Well, it's interesting to think about this contrarian side of it, because when everything's going well and every market is up, kind of like it is now, it's like, well, what do I do? And a lot of these are sunshine investments. As long as the market's going up, as long as rents are going up, all is well. But as 2008 taught us and the pandemic taught us, it doesn't always work that way. But self-storage is fascinating because when times are tough, people have to downsize. They got to put their stuff somewhere. They don't want to part with their heirlooms, so they go find for a relatively low amount that they can store their stuff. Then again, when the market gets strong, super strong, now what happens is they'd like to move up into a bigger house, but they really can't price-wise, so they start storing some of their stuff. So it's kind of like the house they can afford isn't as big, so they got to put their stuff somewhere. And let's face it, we love our stuff. So it's a fascinating thing. But Dave, I know this is obvious to you. There's not too many places where I can myself, with my own resources, buy a huge self-storage park. So it really does lend itself to syndication or to team investing.
It does. I mean, there's a bunch of different ways you can make money in self-storage, but when you're talking institutional grade assets like we're talking about, as most of those are done through syndication or institutional players. And so if a regular Main Street investor wants to play in that game, typically it's done through syndication. And I have a fun fact. You and I believe, are going to be together on Friday night at my house at our investor party, and I got a fun fact that I'm putting together about what we did, and the message is going to be what you can do together as a team is so much greater than what you can do by yourself. And we're gonna the fun fact will be how many 100,000 square feet of self-storage have we accumulated together as a group. Just being able to do it together, number one, it's fun. You got that kind of tribe thing going on, but you can get into a bigger, better asset class in a group than you could do as a lone player.
Yeah, absolutely, right? The big, awesome deals are hard to do, which is why the hedge funds and the REITs and the insurance companies do those things. But mom and pop investors can do that alongside someone who is in that position as you are. And yet at the same time, the whole idea of this institutional grade is something I don't want to let slip by, because there's a lot of self-storage units, 90 units, and some guy owns it, and there's padlocks and people can keep their stuff there. there. But this is different because of its stature, size, and professionalism. Part of your exit strategy, if I'm not mistaken, is being able to get this to the point to sell it to one of those more institutional owners.
Yeah, so 33, I believe, of the last 33 deals that we exited from, we've sold to a REIT. And so when you recognize what the REITs will pay on a cap rate basis for a stabilized asset like that, you would think that when you have a stabilized asset, you'd want to just, keep it and maybe do a refi and maybe just, hold it for the long term. But when you realize the kind of money that the REITs will pay for a stabilized asset, it's hard to justify hanging on to it. You do better when you can go buy another asset from a mom and pop and then add the value through, some sort of development, adding climate controlled units, really getting it to the point where now it's a REIT target and turn around and just doing it over and over again. So that has been our business model, and that's just worked very well for us in the last 30, I believe the last 33 deals we've done have been an exit to a REIT.
Well, you're performing a really unique and interesting part of the food chain, if you will, right? You do have these individual owners, and you do have folks that get into distress and folks that aren't affiliated with a national brand, and there's lots of that, and you go in and figure that out, and your partnership team is great at not just locating those assets, but knowing what to do with them, and then lo and behold, now you change the very nature of the asset so that there's a different group of folks interested, and it's like a big fixer-upper, except it's done on a large scale.
Yeah, this team has delivered in a big way and over exceeded my expectations. We did, like I said earlier on, we did a deal together and just quickly realized that we make a good team and that we like doing business together. And the way they've been able to get the job done, go in there and add the value, and then have those relationships be able to exit to a REIT has just been, it's been a fun ride.
Now, one of the nuances of self-storage, of course, is it's real estate, and it works the way most real estate does, monthly payments and so forth. But there's a big difference, and that's tenant-landlord law. You're not worried about evictions. You're not worried about, people wrecking the units. They're pretty easy to fix. Talk about that side in terms of the maintenance side of self-storage.
Yeah, so there are no eviction moratoriums. Boxes don't sue. It's very easy, if somebody doesn't pay their rent and they're a month unbehind, you just lock the units and you give them that time to make it up, make it right. And if that doesn't happen, you sell your stuff and sell their stuff and move on. But it's a very easy process compared to evicting a tenant when there's non-payment. There's no toilets. Many of the headaches that come along with, let's say, apartment investing. And I'm not bashing apartment investing. We still own apartments. But this is a nice break from some of the headaches that you get from an apartment investment.
Well, I think that is the point, that self-storage isn't center mass real estate investing, but it sure is a way to diversify. You're diversifying your client, because the kind of person that pays to store something, it's usually not their last resort. Although certainly people who are, in a divorce or something might store some stuff short term. It is folks that have some level of wherewithal and interest in the thing that they're storing. And if they don't want to end up on one of those reality TV shows, they need to pay, which we like. But also talk about the longevity of tenants, because now that you've been in this business a while and you've had obviously hundreds of thousands, millions of square foot of these deals, and the average unit isn't that big, you've seen from a larger perspective than probably anybody else we know. What typically is the duration? How long does somebody keep a self-storage unit as a renter?
Typically 1 to 2 years on average. So there is some turnover, but you would be amazed. I mean, there is so often when you actually see what some of those items are, and then you think, wow, somebody paid to store that for the last 3 years. I mean, the stuff that they're storing isn't worth the storage cost. But, it's interesting. It's one of those things where I guess a $90 a month or $150 a month, or depending on the location, geographic location, $300 a month for a 10 by 10 storage space. It's not painful enough to take action. And, you go in with the intent with well, this is only going to be short term, a couple months. And next thing you know, it's 2, 3, 4 years and you're storing this stuff. it makes no sense. But the business model works, and you're supplying a need in the marketplace.
You know, in long-term single family or multifamily investment, we always talk about the two most expensive things are turnover and vacancy. And you have turnover and vacancy when you have self-storage, but it isn't anywhere near the amount of work or headache or even time factor as it would be for some of those other asset classes.
Yeah, I mean, you got a concrete floor and you got 3 walls and a garage door. I mean, there's not much to a turnover. Get a blower in there and sweep it out, and you're ready for the next tenant. So it's, again, very painless in a turnover situation.
Hey, if this sounds interesting to you, wow, self-storage, that sounds like a place that I'd like to be involved. Dave's actually taken the time to put together a report that covers a few of the things that we've talked about and some other things as well. Dave, tell us about the report on self-storage.
Yeah, so it's just a general overview of self-storage, the business model, how it works, and some stats and some graphs, and showing you some of the things we just talked about okay, what happened in 2008 compared to its real estate asset class peers. How did self-storage perform? How much did it pull back? How did it recover? And when you see what actually happens in times like that, it makes a very compelling case, if nothing else, to diversify and maybe own, maybe not 100% self-storage in your portfolio, but maybe have some self-storage in your portfolio as a hedge.
If you're interested in that free report, all you have to do is send an email to selfstorage@realestateguysradio.com, selfstorage@realestateguysradio.com. We're not done with Dave Zook. We've got more to talk about and another asset class. Plus, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me December 3rd through 6th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. Demand for offshore real estate has skyrocketed since the coronavirus shutdown, and with retirees looking for lifestyle, the work-from-home workforce able to be productive from afar, and tourism coming back strong, now may be the perfect time to consider Belize as a place to diversify risk in your investment portfolio. There's all types of opportunity in Belize when it comes to real estate investing, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in December in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates, as well as full travel details. So join me in Belize December 3rd to 6th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events, and I look forward to seeing you in beautiful Belize.
Hey everybody, Tom Ziegler here. You're listening to the Real Estate Guys with the one and only Robert Helms. And I got to tell you, this is where you go for wisdom. And as Dad would say, the checkup from the neck up to get rid of the hardening of the attitude so that you can make a difference in the lives of other people. So glad you're here.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. We're talking today about a couple of hot market niches. We just discussed self-storage, another one on the way with super syndicator Dave Zook. If you want to meet Dave, come on out to the Secrets of Successful Syndication. It happens in March of 2022. You can get on the advanced notice list at realestateguysradio.com under events. Before we get back to our interview with Dave, it's time to play Real Estate Trivia. That's your chance to win a prize by knowing today's Real Estate Trivia question. As soon as you hear the question and think you know the answer, send it to us at trivia@realestateguysradio.com, trivia@realestateguysradio.com. The first person that gets the correct answer is going to win a copy of an awesome book called The One Thing That Changed Everything, a collection of awe-inspiring stories, including one from yours truly and one from our guest, Dave Zook. That can be yours if you know today's real estate trivia question. Last week on the show, we had Steve Streetman talking about cryptocurrency, blockchain, and real estate. We asked this: in May of 2010, the first real-world transaction in Bitcoin was made, buying 2 pizzas for 10,000 Bitcoin. In what real estate market did the pizzas originate? Well, those pizzas were delivered in Jacksonville, Florida. And having just been there, they still sell pizza in Jacksonville. Here's our real estate trivia question for this week. Where in the world was the first commercial self-storage facility? We see self-storage everywhere these days, but where was the first one? If you think you might know, or you just want to guess, send your best guess to trivia@realestateguysradio.com, trivia@realestateguysradio.com. Send us your name, the answer to the question, and your physical mailing address. If you're the first one that gets it right, you'll get this great book sent to you called The One Thing That Changed Everything. That's today's real estate trivia question. Let's say hello again to one of the authors in that great book, Dave Zook. And Dave, let's talk about another asset class that you invest in. Your practice as a syndicator is to offer your investors various investments, and you've done multifamily, resort property, even oil, gas, and coal. But let's talk about a unique investment vehicle, and that's automated teller machines. ATMs take up a tiny bit of real estate, but the returns can be quite attractive. Tell us how you got into investing in ATMs.
So I was a passive investor. I started investing in ATMs. It was a strong recommendation to a dear friend of mine who knew this group of guys, these 2 guys who were longtime Lancaster County, Pennsylvania natives, where I'm from, very respected business guys. And he told me about this ATM play. And so I took a look at it. I liked it from the cash flow perspective. I liked it from a tax perspective. It had, the depreciation that I so like. And I got to be a passive investor in the deal. Over the next couple years, I invested with them a number of times, and I really liked doing business with the guys. I liked the asset class. At the same time, I was building my multifamily apartment syndication kind of network, and I was raising a lot of capital for multifamily apartments. And these guys, we were in contact with each other quite a lot, and they saw what I was doing on that side. And at one point, they signed on to a large portfolio, the largest portfolio that they'd ever done to that point with ATMs. And they said, "Hey, we could use some help over here. Can you come over and partner with us and help us get this done?" And so I was like, I actually turned them down at first. I was like, well, I'm sort of busy over here. I got kind of some other things going on, but they came back to me several times. And when it was getting close to the end of the year, they came back and said, "Hey, we got a special deal going on here where, for the last month or 2 of the year, we're going to offer 100% bonus depreciation in this." And I got to thinking about it. I was like, wait a minute, this works really well for me. I bet this would be a really good tool for a bunch of my investors to help knock down their tax liability and get them into a really good income stream. At that time, I was very familiar with the asset class and I loved it. And I was like, why not? Let's see what happens. And I got to be a partner with the guys in 2016. At that time, it was still kind of just family and friends. I helped them really scale the business in the last couple of years, and today we're one of the top 5 ATM operators in the country.
Well, it's such an interesting asset class, if you will, anyway, because not everybody uses an automated teller machine, but a lot of folks do. And I know you've done a lot of study into the demographics, but you brought up a couple of terms that I want to make sure listeners understand. We're not talking about going out and buying one machine and putting it in the Quickie Mart. Instead, it's kind of a bigger scale than that. So explain how the operation works, because it's not onesie twosie at all. It is a bigger deal.
Yeah, so there's 2 kind of ATM operators out there in the ATM space. The one is the mom and pop operator. They are, as you can imagine, very hands-on. I mean, this is a very cash-sensitive business, as you can imagine. So you've got oftentimes a husband and wife team, or they're running around, they're servicing up to maybe 150 to 200 machines in a 50-mile radius. And they're going into the little mom and pop operated liquor stores, restaurants, bars, those kinds of locations. That can be a very lucrative business. It's a very active business. On the other side of the spectrum, you have the institutional players like Cardtronics and some of the big players, publicly traded companies, multi-billion-dollar revenue companies. Normally, the way an investor would have access to an institutional grade location is to buy stock from that publicly traded company.
Yeah.
What we do is we go out, we play in that same market, and we bid on those same portfolios. They're large institutional grade portfolios. Could be worth 5, 10, 15, $20 million per portfolio. And we take down that portfolio, and what we do is we bring it back down to regular Main Street investors, chop it up in bite-sized pieces. 1 unit equals 6 ATM machines, and the entry is $104,000. So you got an investor taking a $104,000 piece of this portfolio, and once that transaction is done, we put in our fund. We have a management company taking care of all the working pieces of this portfolio, managing that portfolio for them. But it's the only way that I know that an investor would have access to an institutional grade portfolio of ATMs.
Well, and it does a couple other things, because it's not you out there servicing the machines. And, how many times do you see the out of order sign on there for a couple of days, right? That's money being lost. But instead, it really is at a professional level. And with your partnership having tons of these things around the country, that really helps in terms of that issue. But it also does diversify, because you're in different kinds of markets. Maybe talk about the kinds of places that you have many of these machines.
Well, you mentioned earlier on that this is a real estate play, and it certainly is. And when you think about the 3 most important things that has to do with real estate, it's, what is it? It's location, location, location. Well, it's probably even more important in the ATM space. Very seldom does someone who has enough of money to invest in an ATM machine, very seldom is that person a regular ATM user. In fact, many of our investors couldn't get money out of an ATM if they wanted to. So you got to understand who your customer is, and you got to make sure that you get into the location where there's a high foot traffic of those people. And who are those people? In any business or business model, you got to understand who your customer is, right?
Yep.
Our customer is unbanked, underbanked, EBT card carriers, lower income folks, and they use cash. And this is their bank.
Well, and what's interesting about that is you guys make money on a transaction fee. I mean, I know how to use an ATM, and if I do, I usually look at the fee and I go, well, if I'm going to take money out, I'll take a big old chunk out. So I assume, well, everybody's going to take all the money out. But in fact, you've educated to us that the average person doesn't take out a big stack of money.
Yeah, so it's sad, but it's also very good from an investor perspective. We started putting more $10 cassettes in our ATM machines because we figured out that people are taking out $10 bills. They'll pay $2 or $3 to take out a $10 bill. Wow. And it's hard to imagine as a real estate investor, or even someone who's sharp around money and understands money and the ROI that it's being generated for somebody. But somebody's paying $2.50 to $3.50 to get a $10 bill out of that ATM machine. It's just hard to imagine, but it happens all the time.
Crazy stuff. Well, hey, it's a unique investment because it does have some tax advantage. Do you want to speak to that?
Yeah. So first and foremost, you got to like the asset class. You don't want to do it. You don't want to make an investment just because you want to get the tax breaks.
Right.
So first and foremost, it's a cash flow investment. But when you add the tax component to this, it just like it's icing on the cake. It makes it, when you start doing your tax planning around bonus depreciation and you start, getting to the point where you're coming down toward the back half of the year, and then you're like, well, you know what? I got a choice to make here. I'm either going to pay the tax or I'm going to make this investment that's going to end up giving me a stronger cash flow stream for the next 6 years. But I'm doing my tax planning, getting to the point where I'm tax efficient. One of the things that's interesting about this investment, people ask me, yeah, but I don't really want to tie up my cash for 7 years. What happens here is when you consider the tax impact of 100% bonus depreciation, and then you add in the first 12 months of cash flow, you're getting 65 to 70% of your principal back in the first year, and you still got another 6 years worth of cash flow.
Well, and that's one of the intriguing things. Now, there is some complexities about it, the way it works and all that. And thankfully, as people can probably predict, you've done a great report on this space, and probably most folks haven't been exposed to ATMs, maybe a lot fewer than even self-storage. So if you're interested in that report, just send an email to ATM@realestateguysradio.com, ATM@realestateguysradio.com. You can learn more about Dave, get his contact information, that kind of stuff. So appreciate you sharing with us about those two asset classes. As we wrap up our time together and all get ready for the Secrets of Successful Syndication event coming up, you've been through a lot in figuring out your personal investment philosophy, how to bring other people along, how to work with others, how to put together teams, how to know when it's right, when it's not. What are some final words of wisdom that you have to share with the listeners today, Dave?
Well, number one, show up at the Secrets of Successful Syndication, whether you're a passive investor looking to get into some deals with some good operators, or whether you're interested in learning how to syndicate deals and take to the marketplace for others. Make sure you're there. I look forward to meeting you. It's an event that I don't like to ever miss, and I've been a regular for a lot of years now. Always look forward to hanging out with you guys, but maybe even more importantly, hanging out with the people that you attract and get into the room. A lot of great people in that room. That's the number one thing. The number two thing is, I'll go back to Tom Wheelwright and what he told me. If you want to change your tax, you got to change your facts. And if you get into the right asset classes and change your investment habits and change some of your business habits, you can make millions of dollars a year and you can pay little to no tax. So that applies to you. It applies to me, and it can be done. And we'll be talking about a little bit about that at the syndication event in my talk. So look forward to seeing you there.
Hey, Dave, thanks so much for sharing with us today. We'll see you soon.
See you guys.
There's David Zook. He's the real asset investor. And if you'd like more information on self-storage or ATM, just send an email to self-storage@realestateguysradio.com and or ATM@realestateguysradio.com. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide. You're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Registration is now open for the Real Estate Guys 20th Annual Investors Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning in 2022, the editor of the Gold newsletter, Brian London, international real estate developer Beth Clifford, the author of The Creature from Jekyll Island, G. Edward Griffin, Jim Rohn's 18-year business partner, Kyle Wilson, and the rebel capitalist, George Gammon. And joining us live and in person for his 10th Investors Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus lots more to be announced. It all begins June 10th, 2022 in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. Go to realestateguysradio.com, click Summit, and make plans to spend a week with the Real Estate Guys, George Gammon, Ken McElroy, and an all-star faculty on the 20th Annual Investor Summit on Sand. When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Terry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hey everybody, it's Ken McElroy and I'm on with the Real Estate Guys, and I'm very excited to be a guest and a speaker at the Investors Summit on the Sand in Belize. If you haven't signed up, be sure to do so.
And welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. If you've thought about passively investing in deals like we've been talking about today, or maybe you'd like to be the person putting them together, well, then you ought to get your ticket for the Secrets of Successful Syndication. We do it twice a year. We'd love to see you. Awesome to hear from our good friend and super syndicator, Mr. David Zook.
Yes, it is. It's always exciting to see how people, again, take their education and convert it to effective action. You know, the thing is, if you think about what entrepreneurism, the great inventors, they go out in the marketplace and they see a need. They go looking for something they want. They can't find it. And they say, well, I can't find this thing I'm looking for, so I'm going to build it. Or they find it and they realize, hey, more people need to know about this, and they find a way to distribute it, to make it better known, to popularize it, if you will. And Dave's just one of those guys. Dave's a guy that, discovered how to make a lot of money. And then because of that, he ended up having to pay a lot of tax. And because of that, he went out looking for answers and realized, hey, there's a business opportunity here to help other people solve the very same problem I did. And, a couple of his closing comments there that I thought were really notable, that I kind of summarized was get in the right room. And I think that's kind of how it started for him. And he continues to practice that as I watch him and study his progress. He is always working to get in the right room. And now Dave actually creates some of those rooms himself through some of the things that he gets involved in. The second thing is get involved in the right asset class. We railed about paper asset investing for a long, long time. Not that people can't make a lot of dollars. You can trade paper to make paper. But at the end of the day, if you want to own things that are real, oil, gas, precious metals, real estate that produces income, physical, tangible assets that meet a real human need and will always be in demand no matter what the currency is, that makes a big difference. Get in the right asset class. And then alongside that, get in the right strategy. He quoted Tom Wheelwright a couple of times. You want to change your tax, change your facts. Well, there's a lot of facts you can change that affect even more than your tax. If you want to have greater stability, if you want to have resilience in a downturn, some of the talking points that he had with respect to self-storage and the idea that, hey, this is an asset class that actually does well when the world is kind of not doing so well. And, the list goes on and on. But I would encourage people to go back and listen to Dave's comments. Dave reminds me of a couple other brilliant people like Kenny McElroy, who they're like regular dudes that talk about what's going on, but they're super, super successful. And they drop these wisdom bombs that are easy to go by. You miss them if you don't pay attention. I'm glad I don't have to do the interview. I just get to listen and then take the notes and really focus on what the person is saying without having to think about the next question. So those were a couple of my takeaways that I thought were notable.
It's great that Dave is humble to share, because not everybody is who does well. Not everybody who's great at something takes time to teach, but boy, has he become a great teacher and a great role model. And looking forward to the party. Dave mentioned that. That's a cool thing Dave has been doing for a few years, and that is once a year, he invites his investors to come to his house, and they have a big old barbecue and fun time, and they get to meet each other. They get to meet his teammates. So I'm quite certain the folks from the self-storage and the ATM and his various teammates, if you will be there, and it's just a good old time. But it reminds me how important it is that people keep in mind, this is a relationship business. All of the key relationships Dave spoke of in self-storage and in ATMs and in his multifamily and on, those key relationships are what keeps his head in the game and makes sure he can provide the role of watching out on behalf of his investors and also managing the managers, if you will. Keep your eye on it. So if you're interested in learning how to syndicate, Dave is a great role model. If you think that's all way too much trouble and you just want to come alongside someone like Dave, well, that's an easy thing too. Again, if you want to get Dave's reports, just send a quick email to atm@realestateguysradio.com and or self-storage@realestateguysradio.com. And then make plans to join a whole bunch of us at the 20th Annual Investors Summit on Sand. We're going back to beautiful Belize for the second year in a row for an extraordinary event. George Gammon, Ken McElroy, Ed Griffin, Brian London. It goes on and on and on. Just about to open registration for that if it's not done already. So get to the website at realestateguysradio.com and click on Summit. Big thanks to Dave Zook for sharing his big brain and his success with us. You can come out and meet Dave at the syndication event. We've got some awesome stuff to talk about next week. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.